The International Monetary Fund has trimmed its forecast for the global economy, citing slower growth in developing nations. While the estimates are down slightly from earlier projections, the IMF sees the global economy rebounding from 2.9% this year to 3.6% in 2014. For now, the biggest source of uncertainty may be the United States. ARCEGA has more.
The IMF paints a global economy in transition as advanced economies in Europe reverse recent declines and the rapid growth in emerging markets starts to wane. IMF chief economist Olivier Blanchard.
Advanced economies are slowly strengthening, more or less as we forecast in the past. At the same time, emerging market economies have slowed down, and they have slowed down more than we had forecast last July.
But growth is relative. Despite a slight downgrade from its earlier forecast, the IMF says China's growth will remain robust at 7.6% this year. India, which has seen dramatic declines in the value of its currency, will continue to expand at an annual pace of 5.1%. But the United States, barely growing at 1.6% this year, is quickly becoming the focus of global anxiety. Although the IMF says U.S. activity will accelerate in 2014 as the effects of spending cuts wear off, Blanchard says a prolonged government shutdown and a looming battle over the country's debt ceiling could change that.
The effects of any failure to repay the debt would be felt right away, leading to potentially major disruptions in financial markets, both in the United States and abroad.
Without congressional agreement to raise the country's $16.7 trillion debt ceiling, the U.S. Treasury says the government will run out of money to pay its debts on October 17th. China, which holds more than $1.2 trillion in U.S. treasuries, has urged Washington to take immediate steps to avoid a crisis. China's Vice Finance Minister Zhu Guangyao.
We are concerned about developments in the U.S. fiscal cliff and ask that the United States heeds the reasonable demands to ensure the safety of Chinese investments.
The IMF says it's confident U.S. lawmakers will avert a debt crisis, but economists warn that failure to do so could roil financial markets, destroy the country's creditworthiness, and potentially plunge the U.S. and its trading partners into a recession that some say could be much worse than the last. ARCEGA, VOA News, Washington.